Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. Welcome to Bazaar Morning Call. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Nigel here in the Mumbai studio, and Prashant joins us from Delhi once again. Hi guys, good morning. Once again, one eye on the market and one eye on what's happening at the India AI Summit. Prime Minister Modi will kick it off, and then we've got a power-packed agenda with industry titans and global tech leaders, and they will set India's AI ambition and agenda. Hi guys.
Hey guys, hi, morning. And I think the jacket clearly tells you that I'm in Delhi, right? I think, by the way, I must tell you, Nigel, morning, that I got my, not 10,000 steps yesterday, I got my 25,000 steps yesterday.
Wow.
Because,
amazing.
I mean, I don't know if you guys are checking. I mean, it's because there are the AI summit of, once you're inside, there's a lot happening and it's great. But, in terms of getting from place A to place B, also because there are so many sort of global leaders, etc. I mean, I think best that you walk. So I think that is of course something which is uniquely Delhi in that sense. But we've got a market to track, so I guess let's just kick it off there and tell our viewers just the lay of the land this morning. There are a couple of big moves, and maybe we can just kick it off with US equities, which of course is not the bigger part of the move. The bigger part of the move is oil, which I'll just get to in just a bit. But for what it's worth, S&P 0.5% higher, NASDAQ about 0.75%, the Russell 2000 about 1/3% up. So that's the overall picture. And just one thing, right? I mean, we've been talking about, and yesterday as well, we discussed that maybe the momentum in large cap mega tech names is breaking off. The 7 or 8 large stocks, right? Maybe on charts, etc., is also breaking. But for about 2 or 3 days now, and this is very recent, it seems like they're starting to up days are followed by up days. So it's important, and we'll see, because I mean, I think many people were reaching the conclusion that this momentum is kind of broken now. So it needs closer watching. Now, Nvidia was up about 1.5%. One more chip deal was a big one, a chip deal with Meta, which was announced. I'll come to the big price move, right? Oil prices 4.5% higher, 70.5. Same time yesterday, we were talking about how we heard from the Iran foreign minister saying, well, we've reached an outline of a deal, a framework deal, etc., and details will have to be thrashed. But Axios, which is a well-respected, well-regarded outlet in the US, they reported that American military intervention against Iran could come sooner than later, sooner than expected. Some are saying, well, as we've seen, weekends are always when all this stuff has happened, at least in the last, year plus of President Trump. And maybe we could see escalation as early as this weekend. So oil, of course, jumping up. But it was not just oil, right? Gold was up 2%, silver was up 5%, and Bitcoin prices at about $66,000, that we saw. Dollar index is the other one, which is, of course, safe haven. So all linked, 0.5% higher in the dollar index, now almost 98 now, as far as the broader dollar is concerned. Now, FOMC minutes came through. You could read it either ways. Some said, well, maybe we need to pay attention to weaker labor data. But for me, I mean, I think this is, of course, the reason I'm highlighting this is because the other view was consensus. But it showed that many policymakers signaling renewed worries around inflation and saying that if inflation stays persistently above 2%, maybe we'll have to look at rate hikes as well. 10-year yield, 2 basis points higher at about 4.08%. That, of course, was the other indication from the bond market. Now, I'll just, as we've been doing for the last many days now, taking stock of where software stocks have landed last night, and in the US, that is. So, Infi ADR was up 2%. Wipro was up about 0.4%. This is a space which has fallen, in about 11 out of the last 15 trading sessions. So this is a little bit better in terms of the screen. EPAM, Globant, Cognizant, and Accenture all seeing recoveries, but these are small recoveries in light of the 20-25% sell-offs that we've seen come very, very quickly. So, it's a sector which is being heavily debated in the US, and I think here in India, of course, as well. And we'll play out sound bites of N. Chandra, chairman of Tata Sons, somebody who's actually worked in the software field, heading TCS for a number of years. We'll, of course, also hear from the current CEO of TCS, Krithivasan, on some of these aspects. I'll just tie in with the levels here. So the Nifty, 25,780. I mean, the numbers don't change in that sense. That's the resistance. And the support, 25,450, is the support on the downside. As we've been saying, I mean, the market remains in a range, and that has remained true. Yesterday, the Nifty ended, I think, about 50, 60 odd points lower, largely on the back of the IT pressure. Today, I'm not sure if the IT stocks, there's not going to be a great impulse to come in and buy, but maybe slightly higher across the IT board is what you'd expect. And that perhaps shows up in the Nifty as well. 40 odd points is the implied open on the upside. Nigel has walked across to the wall with the F&O positioning, the stance. Nigel, take it away.
Well, that's right. You'll want actually some build on in terms of that green start that you're seeing of closer around 40 points or thereabouts. In the last few trading sessions, any kind of dip has got bought into, which is good news. The institutional participation, well, it's been relatively lower. But institutions, as I said, well, they were net buyers. Closer under 1,500 crores is what they bought. And the FIs have bought closer under 1,100 crores. But you need to note that the gross participation this week itself is lower by closer around 50% if you compare it with the previous trading sessions in February itself. So FI gross participation sharply lower, though they have been buyers, which is good news from a market perspective. But we'll have to wait for them to come back in their full fury to, in fact, see what is their intent from here on. On index futures, there were some shorts that got covered and there was some long addition. So the swing factor out there was close to around 7,000 contracts. The short position, though, continues at close to around 77%. Now, that's the lowest you've seen in more than 3 months, actually, in terms of percentage short positions from the FI. So there has been quite a big short covering bounce that we've seen from around 92%. That's come down to around 77%. The FIs, they wrote more puts than calls, which is encouraging in an uptrending market. And also some of those calls that were written earlier, there was some packing of the bags, there was some unwinding of those positions. So the calls written, they were shedding, while you had the puts that were getting written from the FIs, which is good news. That's caused the Nifty PCI to move from around 0.64, just around 3 trading sessions ago, to around 1.22 odd. So pull up a couple of strikes. The 25,800 call, well, saw a good amount of open residuation, close to around 20 lakh shares out there. The premium ballpark around 150 rupees. The 25,700 put as well. There was a good amount of addition out there, and there is a sense that there was some writing out there, which brings us to the levels. Going by the writing, you're seeing at around the 25,800, 25,850 call. Well, the 26,000 mark, that becomes the crucial resistance mark that you're looking at. And in terms of a reference point on the downside, the first level will be the 20 DMA. So ballpark around 25,550. You don't want that level to get breached on the downside. The tech index, yesterday actually it ended sharply lower. But I'll tell you what, it came off considerably from the lows that we saw in yesterday's trading session. So it bounced up close to around 1.5%. And given that if this can hold out, the deeper one is the February 13th low of around 31,400 odd. If these levels can hold out, you'll believe that there is some more relief rally that's left in these IT stocks. So they'll have to participate because the Nifty Bank has been in spectacular form. So if you get some contribution from the tech index, we could very well be near around the 26,000 odd mark. The only problem is geopolitical tensions are creeping up yet again, and that's caused Brent crude prices to spike up. But when Brent spikes up, the oil producers could gain. So ONGC and Oil India could be the stocks in focus for today's trading session. Net-net, GIFT 50 suggests a positive start. You'll want to see some build on from there on.
Indeed, we've had 3 positive days, consecutive positive days. So it's been a good run. Let's hope the momentum continues. Let's get to the equity calls then. It's Mahesh Nandarkar of Jefferies who says improving corporate EPS growth over the last 5 quarters has made them more confident of their bottom-up 5 percentage point FY27 MSCI India EPS growth improvement forecast to 15%. Ex-FIT, that stands at 16%. He says there are top ideas within the company showing strong earnings improvement in FY27 versus FY26 are Ambuja Cement, AU Small Finance Bank, Axis Bank, Bajaj Finance, Bharat Forge, Chola Mandalam, Eternal, Godrej Properties, Hindustan Zinc, JSW Energy, Mankind Pharma, Samvardhan Motherson, Sona BLW, Star Health and Voltas.
I just want to quickly read out this quote coming in from Rhythm Desai of Morgan Stanley, who says that earnings recovery extended in the third quarter as growth beat estimates driven by top-line strength. He says broad market earnings outperformed the narrow market while earnings estimate revision breadth and depth improved during the third quarter this season, suggesting that revisions may have bottomed, that is, downward revisions may have bottomed. He adds their best bottom-up ideas after earnings are that they are overweight in Polycab, Lenskart, Shriram Finance, Grasim, Tata Steel, IOC and Eternal. They are underweight on Dixon, Berger Paints, State Bank of SBI Card, Shree Cements, just want to say not SBI but SBI Card, Shree Cement, SAIL and SRF.
All right, let's get the spotlight on crude because Brent is now back above $70 per mark. U.S. Vice President J.D. Vance yesterday said negotiations with Iran went well in some ways, but Tehran is not yet willing to acknowledge key U.S. demands, raising fears of possible military escalation and a potential supply shock. Peter McGuire, CEO of Trading.com, is now joining in. Thank you very much. Peter, how critical is Iran to the global supply equation today? And if exports were to drop, what would be the impact on prices?
Well, good afternoon. Oh, good morning, Rima. Look, it's very, very complex in the sense if they were to shut the Strait of Hormuz, we all understand the impact that could have. 30+% of crude of the global supply flowing through there. The impact is going to be felt very much in China and, of course, across the fabric of Asia. And whether that was going to be a short-term event or the US military would be able to keep the strait open is the great unknown. So I think a war premium would be built in very quickly as far as price, and no one knows as far as duration.
And the contribution of Iran to the overall global supplies?
Well, it's certainly a major contributor, and we all understand as far as, OPEC barrels and so on, the impact is going to be one, it's going to certainly cause much concern naturally to the Iranian economy. Secondly, the consumers of that crude, who's going to fill the breach as far as, the likes of China and Asia. And the second and third orders of consequence that take on board from those decisions are greatly going to be, I think, felt across the supply chain.
All right. Hi, Peter. Good to see you. And as always, so what would you be building in terms of a Brent crude move? That was holding at around $63, around $65 a barrel. It's moved to around $70 per barrel. Unsure what's going to happen next on the geopolitical front. But if you were to build up a couple of scenarios, if things escalate from here, where do you see Brent crude prices moving? And if in case, hopefully, the worst doesn't take place, then what's the range you're working with based on demand-supply dynamics on Brent crude prices?
Well, good to see you, Nigel. I think first off, let's assume that, and we've had a big move overnight. It's up the best part of $2.50. So it's been strongly bid up, and that's one of concerns as far as naturally price. And the other side of it, whether we're going to see a continuation leading into the back end of the week with, tonight in New York and of course, tomorrow. So there's the first part, the overall move to the upside. You could take a 75 out. Considering where Brent is at the moment, it's been, it's the best part of nearly $71 a barrel. So I think that's got the potential to take a kick up from here. And then if we don't see any, issues and it seems to subside again, then I'm pretty sure that you'll see a few dollars wiped out of the market fairly quickly. But these are great unknowns, Nigel, and we have all been around this long enough to appreciate the dynamics of the energy market.
My question is not so much about oil, but the headlines affecting oil. What's your sense, Peter? Hi, morning. What do you make of all of it? You think, I'm just asking you as someone who's watched this, right, back and forth. Is this posturing, carrot and stick, and this is the stick? Do you think it'll come to it? What's your hunch? If I'm not asking for, this much barrels or whatever, but what's your hunch here? You think this will be a fight?
Yeah, Prashant, look, it's early in the conversation in the sense we're looking as far as any possibility of a strike, or I think there's a lot of water to flow under the bridge until that happens. Possibly they're saying, you could see some sort of military action, 50% probability or greater by April, but we're only in that third week of February. If Iran does threaten the closure, what is going to be the outcome as far as that's a Strait of Hormuz, of course. Where does the Trump administration, do they let them go forward with that, or do they restrict it? So there's the first part. The second part is where it rolls across the other complex and, of course, precious metals, and where does US dollar trade? And do we see an uptick as far as safety and US dollar has a rise? You could see it back at 99. Gold, I think, would probably take another step up, and silver as well. So across the commodity complex, it's going to be one word, and I think that's going to be volatility, and that's going to continue over the next matter of weeks leading into an outcome.
Oh, yeah, absolutely. And we'll see what really comes out of it. Now, we've completely stopped talking about the other one, right, which is Russia and Ukraine. And I think there were some comments from President Zelensky saying that I'm not sure the talks in Geneva have led to anything meaningful. So in terms of product spreads, what's your sense? Diesel, etc. I mean, they remain high? And where are we at?
Well, they do remain high, and as far as if you see any, and we understand as far as an outcome between Russia and President Zelensky, Ukraine situation. So there's no determinant yet as far as whether we're going to see a line drawn in the sand from a timeline perspective. I think it's just it's just work in progress, and where it hits as far as other components of the energy sector. So, we're very mindful as far as daily barrels. We understand there's a little bit of a glut in the market as far as production. So that's going to be a buffer leading into Q2 and where the impact's going to be as far as price. If you strip geopolitics out, then I'm sure you're going to see cheaper crude. But when you're dealing with geopolitics, that can quickly escalate things and escalate them quickly.
All right, Peter, thanks a lot for joining in, giving us an update with regard to the commodity markets. Also, mate, we were looking forward to playing you all in the T20 World Cup. Unfortunately, that will not take place, Peter, but I believe you're cheering Team India now.
Yes, Nigel. Well, I do cheer you on, and I'm sure you'll carry the cup again.
All right. Peter, sometimes doesn't work, mate. I mean, with regard, Team Australia has done well in the past, but you guys will miss out this time around. But glad to know that you're in our corner.
Thank you, Nigel.
Okay, all right. Let's move on then. Let's tell you what we have lined up on the show today. Coming up at around 8:35, we have Moshe Khatri of Wedbush Securities to discuss the recent AI trends as well as the impact on the sector. At 9 a.m., we'll be joined by the management of Blue Star to discuss the company's FY27 outlook and the road ahead as well. At 9:20 a.m., Rana Gupta of Manulife Investment Management will be joining in as a market master of the day. At 9:35 a.m., the management of KEI Industries joins us to discuss India's data center market growth, momentum, and more. Following that, we'll be chatting with the AI company's founder, that's CP Gurnani, on AI trade and the IT sector at 9:45 a.m. And towards the end of the show, Lata speaks to Ashish Gupta of Axis AMC on banks, bonds, markets, as well as macros. Stay tuned for all of that.
Time for a short break. We've got lots of stock-specific action to track on the other side. This is our special top 10 segment. We'll be looking at HUL, Dr. Reddy's, BL Kashyap, DCX Systems. These are the stocks which could open up in the green or the news flow is positive. Alembic Pharma, Tips Films, Yatra Online, NCC, Jindal SAW have some negative news flow going for themselves. And of course, keep your eye on all the crude sensitives today.
Okay, welcome back. I think, 35 minutes to go for the pre-open session to kick off. Our research team is standing by with our list of top stocks for the day. And we want to start with Vinny, she's got stocks with news flow. Vinny, morning.
Hi, good morning. So first up, I'll talk about Hindustan Unilever. We saw that there's an announcement that came in, which is of around 2,000 crores to expand manufacturing for premium beauty and home care categories. Now, the timeline within which they're going to be executing this expansion is going to be in the next 2 years at multiple locations. This is aligning with HUL's strategy to approach fewer and bigger bets, which are in high growth area. So that is why we're expecting green on the screen for HUL. Dr. Reddy's, we have some positive news for coming in here as well. The company is to acquire 2 brands from a UK specialty pharma company. This is an acquisition of around $32 million. The acquisition is in the gynecology space, and obviously this will mark Dr. Reddy's foray into the hormone replacement therapy. One of the brands which they've acquired has 100 crore sales in the Indian market as of now. Moving on to Alembic Pharma, now the company said that there was an unannounced US FDA inspection which had taken place at one of their injectable facilities in Gujarat. So they received 2 observations, but these observations were not anything major or not anything related to data integrity, but still a bit negative on the sentiment front. Tips Films, that's another one we'll keep an eye out on, expecting great here as well. The GST Department of Mumbai has conducted search and seizures at operations which they conducted on 17th of Feb, and it's still ongoing, is what the company highlighted yesterday in their press release. Yatra Online, red expected here as well. The company's promoter sold 1.8% stake in the open market. Mainly, this is going to be to fund legal as well as compliance expenses. The promoter who stole stake was THCL Travel Holdings, and they held 57.4% stake as on December 2024. Though the promoter has clarified that they will not see any further stake sales in the near future, but we could see red on the screen today for the stock on the back of this.
Thanks a lot, Vinny, for giving us that list of stocks, but you're not done. Hopping across to Gaurav. Gaurav, tell us about some more stocks in the news.
Well, yes, first let's talk about NCC. Now, sentimentally and financially, a bit of a negative news flow, and the reason being that NCC has been now debarred from participating in any of the biddings for NHI for the next 2 years. Now, what they have disclosed is that there were some disputes between OB Infra, which is their wholly owned subsidiary, and NHI, and that is the reason why they have been debarred. Company has specifically mentioned that there won't be any financial or operational impact on the existing orders and ongoing projects, but we may see some negative sentimental impact here. Jindal Saw, there also company has been actually suspended from using and restricted from using the API in one of their products. And the reason being that during the audit that was taken by API, which is American Petroleum Institute, there were some non-conformances which were observed, and that is the reason why they have also been suspended from using the API facility in that. Other than that, on the flip side, on the positive side, we have BL Kashyap. Now, company has received an order worth 300 crore rupees. The tenure of the order is going to be 42 months. And remember, if you look at the order book, as of third quarter of FY26, company had reported an order book of worth 5,300 crores. So, a positive news flow here. And let's also not forget about DCS System, because they have also received an order. They have received actually 2 orders worth 45 crores. So, there also we may see some positive impact happening on the stock today.
Okay, all right, Gaurav, more later. Thank you very much for that. And we'll address more names as we go along. But we just want to get back to the big story from overnight. Of course, oil is the big commodity in focus. Manisha is here with what she's picking up. Manisha, morning, but it's just not oil, right? I mean, the underlying reason is sort of lit a fire under silver, gold. I mean, the dollar is up. Tell us.
Oh, well, absolutely. It's geopolitics coming back and very, very strongly on that. And as you said, the crude oil prices have gained up by 4% in the overnight market. We are above $70 a barrel when it comes to the Brent prices. And not just crude. When you look at the crude products as well, the U.S. heating oil prices are up by 5%. Well, the U.S. and Iran are yet to reach a potential nuclear deal. And the kind of statements that we are hearing from U.S., there are fears of military intervention by U.S. and Iran a possibility. There also have been various reports that Iran temporarily shut parts of Strait of Hormuz. They perhaps did it for a few hours, but whether or not those parts are open yet or not is a news that has not been confirmed yet. And that's exactly what is lighting this fire under crude especially. We also have seen decline in U.S. crude inventories. That has been supportive as well. And then it's not just about U.S. and Iran, right? Because Ukraine and Russia talks in Geneva also have ended without a breakthrough there. Interestingly, there is a report from Eurasia Group that says that there is now a 65% probability of a U.S. military strike on Iran by end of April. not working well for the crude oil prices. And with this, you have seen safe haven buying come in for gold and silver. Gold gained 2% overnight. Silver was up 5% as well. Platinum gained 3.5%. And we've seen tangible commodities actually do quite well.
Got it. Okay, all right. Thanks a lot for that, Manisha. Well, here's a quick recap of all the top stocks that we're tracking for you, the ones with positive news flow. Hindustan Unilever, Dr. Reddy's, BL Kashyap, DCX Systems, while stocks with negative news flow include the likes of Olympic Pharma, Tips, Yatra, NCC, and Jindal Saw. We'll also be expecting mixed reactions on the crude sensitives. Well, let's get you some brokerage calls. Sudarshan has gone through a whole host of them. Sudarshan, morning. Run us through the list.
Good morning, Nigel. So first one is CLSA has written on Dixon Tech. It has downgraded the stock to hold from outperform, and target prices cut to rupees 12,100 from rupees 18,000 per share. And it has talked about increase in the memory prices and its impact on smartphone volumes for Dixon Technologies. It's saying that memory industry is entering a super cycle while mainstream storage faces tightening supplies and rising cost, and India's dependence on imports leaves it exposed to this global squeeze. Memory prices of DDR5 and DDR4 contract rates are up in the range of 63 to 120% month on month, while NAND contract prices are up in the range of 40 to 70%. Now, for Dixon Technologies, smartphone volumes are at risk, and rising memory cost could inflate realization in the range of 10 to 25%. Goldman Sachs has written on Eicher Motors. It has increased the target price to 9,200 while maintains the buy call. It said that post GST rate cut, volumes, 350cc Hunter volumes have seen a sharp increase, and current volumes now are at a run rate of 20,000 units versus 1 year earlier it had 15,000 units run rate. And also part of capacity expansion that company is going to take over next 2 years will support further volume growth, and it has raised FY26-28 EPS estimates by up to 3%. Last one is CLSA on Coforge. It maintains high conviction outperform call, and target is 2,426 rupees per share. It says guidance for 2026 by Sabre seems in line with the street estimates, and it has guided for mid-single-digit revenue growth for FY26. In the earnings call, it has highlighted significant AI infusion in the product platform, and Coforge had signed a large $1.56 billion deal over a 13-year period with Sabre in March 2025.
Thank you very much for that, Sudarshan. We will slip into a break. On the other side, we'll connect with Dipan Mehta of Elixir Equities for some fundamental stock talk. We'll also invite Moshe Katrio Wedbush Securities to discuss the AI trends, the pain that we've seen in IT stocks. Welcome back. Back to getting you important sound bites from the India AI Summit. Yesterday, Tata Group said they're not pressing the panic button over the AI disruption. Chairman N. Chandra said TCS will ride the AI waves and IT companies will have greater responsibilities in the AI era. Meanwhile, TCS MD and CEO also believes that every disruption ultimately expands the scope of work. Listen in.
The way to look at it is, it will create enormous opportunities. AI is a very, very important multi-decadal change. Every company has to figure out, has to ask fundamental questions. What is my moat?
If I could rephrase what you said, it's not going to be so easy to throw out Indian IT services companies in the mix as is being made out to be. Essentially, that's the point that you're making.
Point. The second point, actually, the more important point I'm making is IT services companies, rather system integrators, will have a greater job, greater responsibility. One other point, but the companies have, IT companies have to do a lot of work.
Yeah,
like every other time, they've got to equip themselves with all the skills that are required. They've got to go through that.
Execution. The execution risk. Absolutely, the execution risk is going to be the key one.
There's so much happening, and there is no need to panic. You have to think, sit back, relax, and think properly. There's so much of more work to be done. Every time there's a disruption, the work expands. And the good companies will participate, take a forward-leaning approach, invest in that, and they should be able to increase the pie. It's again based on a larger scheme. We believe that you will be able to participate more in the AI ecosystem if you operate across multiple layers. We are looking at participating right from the infrastructure layer. There's an infrastructure layer, there's a model layer, there's an application layer, then there's the intelligence layer. We want to increase our participation in each one of those layers. That's why you see we participating with TPG, then signing up with AMD. We also signed up with some of the design companies. So that's the overall plan.
TCS, with its data center ambitions, Hypervault is also in a way not pivoting, but also adding the AI infrastructure layer in addition to its software services that it already does. And according to the CEO, Krithivasan, this only expands the work as you participate more in the AI ecosystem. So that's TCS for you. AI infrastructure is also getting added into the mix now. Moshe Khatri is now joining in. He's the Managing Director, FinTech Tech-Enabled Services. He's joining us on the show. Thank you very much for joining in. You know, Moshe, the artificial intelligence boom that lifted markets, particularly global markets, is now cutting both ways. And we're seeing broad-based indiscriminate selling globally and back home, even in India. The Nifty IT index is down 15% from the start of the month. Are you seeing value emerge in the sector or any particular stock that you'd like to highlight, which is now looking attractive?
First, I would actually listen to Chandra as a very smart guy in terms of what he has to say. I think in general, we're getting very close to the multiples that we've seen back in the 2008 market crash. Typically, the floor is going to be somewhere in the low teens. But I think in general, we are definitely seeing value, real value, attractive value in this industry. But obviously, it's all about the narrative, right? You know, the message from Infosys and some of, you know, obviously they had an analyst day that focused on AI, and from some of its peers is that, you know, modern enterprises, they operate, I would say, on deeply integrated stacks of data, processes, security, I don't know, frameworks, structures, architectures, and there's mission critical software layers with tech-enabled services kind of bringing the glue that connects these layers. And these systems are really the hearts and lungs of today's enterprises, making wholesale replacements, which is what the market is telling you, not only unrealistic, but also very risky. And in our view, this ecosystem of software, services, cyber, infrastructure are really going to be the pillars, the foundational pillars of this AI revolution, and not going to be their casualty. So in general, going back to your question, when we get closer to the low teens, based on what we've seen in the past, this is probably when you start looking at some of these names.
Yeah. Moshe, hi. Morning. Deepan, morning. So you're saying, Moshe, when P multiples get to in single digits? That's what you're saying?
Low teens.
Low teens.
Where we were in the 2008 crash. And that's probably
the floor at
this point, I'm assuming. Somewhere in the mid-teens.
Okay, and okay, so 15-ish, and you'd be comfortable buying.
Typically, the floor.
So we're almost there.
Crashes were low teens. Yeah. That's what we're using as a proxy.
I see. No, I mean, and you're absolutely right. I mean, you know, I was there and when Chandra made those remarks, and we heard from Krithivasan, who's the current CEO of TCS. We've heard from Nandan of Infosys. We've heard from, you know, we're starting to hear CVK of HCL Tech, and they're all kind of sort of highlighting one thing, that it's very different when you and I use these models and kind of, you know, and when enterprises use them, because enterprises have all these legacy things which you can't just slap this on top of everything and expect it to work. So there's a lot of integration work, etc. So the opportunity is large in that sense. I just heard one thing. Deepan is also with us. Deepan, of course, is a veteran in markets, but he doesn't like IT services. Deepan, am I right?
Yeah, well, I was beginning to like it. You know, I thought that eventually things would start to get better. But, you know, every day we're getting new news about how this particular AI threat is evolving. And while I agree that valuations are attractive, but look, back in 2008, if you had mid-teens as a good entry point, but the growth thereafter was going to be exceptionally good. and kind of mid-high teens to 20% thereabout growth rates. But now I think you see last 4 or 5 year growth rates, and even after the AI opportunity, the growth rates for the large IT companies will still be maybe single digit, mid to high single digit. So you can't give the same P multiple of 2008 as a good entry point, in my opinion. But end of the day, I think there's just too much of uncertainty. And as investors, we like to avoid uncertainty. There are so many great ideas and sectors ready to be invested, researched and invested. Investors will move on and look at those sectors.
Right. You know, I had a question here. Moshe, and this is with regards to what's happening with the US listed software companies as well, not just the Indian ADRs, right? Do you think because this is, new technology and you need not very many people understand it in terms of how this is going to work its way through the system, etc. Most money managers are in that sense generalists, right? I mean, Deepan is a veteran, but he's a generalist. He's not an IT specialist. I mean, commentators like me aren't IT specialists. So you think that is one reason why it's like sell first and ask questions later, that kind of a mood? I mean, the view may be right, but you think that's the dynamic at play?
So there are two things that are going on in this market. As you know, algorithms probably account for a very significant amount of the volume in terms of trading these days. So I'm assuming a lot of these algorithms were fed pretty much a short and bare kind of story here. And that's how you're seeing kind of across the board sell-off. And your typical general investor is going to sell and wait to see where this goes. Now, going back to my colleague on the panel who just spoke about growth rates. So if you think about this, can enterprises really come out and say that they're significantly spending on AI agents and platforms? Probably no. But the way we see it, we'll probably get a better feel 12 to 18 months from now when we are expecting, a software and services-led tidal wave of investments as AI use cases mature, and you're going to see large deployments move from experimentation to production. And I think that's going to be the next phase of this tech boom. And that I'm talking about the entire technology ecosystem. The growth rate in the industry has really varied. During the pandemic, some companies grew 50, 60% top line. Post-pandemic, we've seen, I would say, dismal growth, and some of it has to do with, companies kind of digesting all this investment that they've done during the pandemic. And on top of that, you've had kind of a discretionary spending slowdown. And I think this is where enterprises needed to kind of figure out what they wanted to do in terms of their AI strategy. But going back to the timing, I think the next 12 to 18 months are going to be very significant in terms of importance for the sector. And this is, in our view, we're going to start seeing some of those projects maturing, scaling, and probably getting larger, and you probably see better growth rate for the industry.
Moshe, did you just say a tidal wave of AI investments will, come in as AI use cases? Tidal wave.
As projects mature.
As projects.
Okay, as projects move from experimentation to production.
Got that. So there's no doubt that there is an AI opportunity. There are spends, but those spends are also getting split between, say, the big tech companies, LLMs, and the software companies and the Indian services companies. There is an execution risk, which is what Salil Parekh said or Nandan Nilekani said at the Infosys AI Day. The opportunity is there, but now it's over to the Indian IT companies to adapt and execute and capitalize on that opportunity. So can we say with certainty today that which IT company is the best positioned to capitalize on this opportunity? To your mind, who do you think is?
Who are you referring to, Rima? I'm sorry.
Indian services companies, Indian IT services companies.
Are you talking to me or to my colleague?
Sorry, Moshe, this is for you. This is for you. Which company is best placed to execute?
I would say at the front, up front, at least for now, the tier one offshore companies are in great position in terms of reskilling, building the production, building the agents in terms of industry focus, et cetera. And then the digital IT services companies, just given the fact that they have product development and digital engineering. So these are the two groups that I would kind of focus on in terms of the potential winners here. And as I said before, you still have 12 to 18 months until you get there.
Okay, Moshe, thank you very much for joining in. Dipan is still with us, Nigel.
Well, that's right. Thanks, Moshe, for joining in. Let's continue talking about other spaces besides tech then. Dipan, morning, good to see you in. What about NCC? It appears a bit of a sentimental knock. They've been barred from some projects. I was reading a couple of notes. They believe the impact may not be that large, but it'll be a sentiment hit. Your view on the stock, a stock that's halved from the recent peak?
Yeah, that's right. I think that such ups and downs keep happening with such companies, and you need to diversify your holdings within the infrastructure space as engineering construction space. But end of the day, it's a great company, and it's executed large projects, and these things tend to kind of work out in the long run. Order book position also is strong, multi-year visibility is there, and valuations are attractive. I wouldn't sell NCC just on this news per se, especially if I have a low exposure to engineering construction space. And there are good companies, and there are great companies. NCC is one of the good companies. But I think you need to consider having L&T in your portfolio. That's like a must-own stock. Having said that, we and our clients are invested in it, and I thought the numbers and the kind of commentary was exceptionally good.
This NetWeb, there was some announcement about, building supercomputers yesterday. Did you analyze it? Because I think this is a company that you've looked at.
Yeah, that's right. I think it's a great company. And, the PE multiples kind of scared us, so we did not invest in it. And we just kept on looking at it, and it's gone up higher and higher. Look, this is the problem. There's only one company in India that you can buy, which makes these supercomputers, which benefit from AI. And then there is E2E Network, I think, which is the other company, which is into data center type of business. So I think a lot of money going into such business because you can't buy any other direct AI play. And that makes them extremely expensive. In my experience, buying such high PE stocks, while they do well in the short term, they give you 8-10% return. But then over a 3 to 5 year period, the returns diminish significantly because you're a bit late in the game. So I would just like to wait and watch if there's a deeper correction or if the earnings truly surprise on the higher side and PE multiples are at comfortable levels and the risk return profile, margin of safety is there, only then one would like to invest.
Dipan, stay on. Need to slip into a short break. We'll come back. We'll also get in a few technical trading ideas. Sudarshan Sukhani, Mitesh Thakkar join in for some technical trading ideas.
Welcome back. Here with us here in Bazaar. 8 minutes to go for the pre-open session to kick off. Sud's joining in with the stocks which moved and the delivery action behind them. Sud, morning.
Morning, Prashant. So first name on the list is NDL Ventures, which earlier used to be known as Next Digital. Now, this stock has been buzzing off late on the news of CCI approving the merger of Hinduja Leyland Finance with the company. If you remember, NDL Ventures had already announced about this in the month of November. Now, yesterday, this stock was up 20% and it's up 40% since the time it was announced first on 20th of November 2025. Yesterday, volumes were at 5 lakh versus previous 10-day average of just 25,000. And two major promoter entities of Hinduja Leyland Finance who will get the shares are of Ashok Leyland and Hinduja Automotive. Second stock is Godfrey Phillips. That stock has been buzzing along with ITC on the news of cigarette price hike. Yesterday also we had the note from UBS on the same. So yesterday Godfrey Phillips stock was up 20%. Volumes were 5 times 10-day average. So volumes were at 1.1 crore versus 10-day average of just 23 lakhs. And delivery volume was highest that we have seen since January 1 of 2026. And stock is now 10% away from the levels it was ahead of tax increase that we had seen at the end of December. That was basically on 31st of December 2025. Next name is Aeroflex Industries. Stock is at 52-week high. It was up 10% yesterday and volumes were at 2 crore versus 10-day average of just 38 lakh. And on February 3, Coheed announced allotment of preference shares, and amongst all the names, one name was Ashish Kacholia, and since then this stock has been buzzing and moving higher. Last name is Matrimony. The stock hit 52-week low yesterday and volumes were at 4.5 lakh versus previous 10-day average of just around 30,000, and down move started after Q3 earnings where company had reported decline in both billings and revenue on a sequential basis.
So interesting list of names there and interesting news and price action Thanks very much for that. Deepan is with us. Deepan, any thoughts on two names? One is Cohance. High was 1100, stocks at about 325 that placement talked about. I don't know if you have any thoughts. Second is Edelweiss, was up 6% yesterday. There is that ARC firm which has got to get listed at some point, right? And it's a large one. It's a Edelweiss subsidiary. We've been kind of waiting for that for a long time. Any thoughts? These two names, Cohance and Edelweiss.
Yeah, Prashant, we are investors in Cohance. I mean, in the earlier avatar also. When it was Suven Life Sciences, so we feel the pain. But I think the time to sell Cohance is gone. I mean, one should have recognized the signs much earlier. End of the day, I still remain very positive on the CDMO space, and Cohance and all other companies like that. They have certainly had a very bad set of earnings season last 2-3 quarters or so. But I think turnaround could be there next 2-3 quarters down the line because the inquiries have really doubled for these companies. And there's a solid fundamental case for CDMO to do well from India. So I think the time to sell is gone. So you remain invested and wait for a turnaround.
Got it, Deepan. Appreciate you joining in. Thanks a lot. Wishing you a good remainder of the day. Well, time to take a short break. Come back. Pre-open rates will be with us. We'll also have the management of Blue Star. They'll be discussing the company's FY27 outlook and also the road ahead. Stay tuned. Welcome back. Hope you're having a good morning. As promised, let's welcome our technical experts. We have Sudarshan Sukhani as well as Mitesh Thakkar who join us on the show. Good morning, gentlemen. It's been a good week so far, right? 3-3 in terms of green closes, but volumes and participation has been relatively lower. That said, given that we're going to have a 50-point bump up going by what the gift Nifty suggests, what would you do, Sudarshan?
Yeah, good morning. Well, I'm very pleased. Yesterday we said let's buy towards 25,650, and the market obliged us by going almost exactly there, and we are up 200 points from that level. Now the trend is up. That much short-term trend is up. That is quite obvious to all of us. We still want to be buyers, but again only on a shallower correction. We won't get that deep correction. Somewhere around 25,760, 770. If we get a dip, go long again. If you have long positions, maintain them. Your stops are 25,700. Also remember that today is sensex expiry, so there could be some volatility. Don't get affected by it.
Got it. All right, Sudarshan. Thanks for that. Mitesh, I recall yesterday I was asking you, carry the long positions or not. You said maybe it has more in store. Given that we have a 50-point gap up post the recent surge that we've seen the last few days, what would your take be on the index first? What are the levels? Where's the next resistance level? Where does support come in at?
Morning, Nigel. So, I've been maintaining that 25,750, 780 is the zone on the upside. And yesterday we managed to close above that. So, to me, it is a positive. And that's why, the idea was to maintain your long bias. I think the next logical target should be 26,000, which was also the recent highs made on the 10th or 11th of February. And that's the first target. And eventually, if we cross that, a good chance of the all-time highs of 26,300 being retested will come into picture. So for the timing, we'll keep a target at 26,000 and then possibly 26,250, 300 zones.
Yeah. Got that. Gentlemen, morning. Good to see both of you. Mitesh, in terms of specific stocks, what would your trades be?
On the stock specific side, Prashant, good morning. I have all buy calls today, despite the fact that it's only a small gap up. A lot of charts are looking good. So Keynes Technologies is the first thing, first buy recommendation. Keep a stop below 39.70 here. Look for targets of 4,200. Indian Bank made a fresh high, all-time high. That's a buy at the stop at 919 for targets of around 980. Then a buy on CG Power, that's also a stock which has been showing good signs of an uptrend. So keep a stop at 695. Look for targets of around 740. And Bajaj Auto, similar kind of setup, fresh swing breakout. That's a buy as well. Keep a stop at about 98.80. Look for targets of 10,250.
Okay. Sudarshan, what about you? What are your trades?
three buying calls and one sell. So the sell is IRCTC, where it could consider selling with stop above 630. SBI Life is a buy with a stop under 2020. A Fintech is a buy with stop under 1020. And PNB, again, banks, PSU banks are just rolling away. PNB is a buy with a stop under 125.
Right. Mitesh and Sudarshan, thank you very much for joining us. Appreciate your insights and, of course, trades as well. By the way, there was a flash at the bottom of the screen. We should have mentioned this earlier. The currency markets are shut. And, our friends on the Forex and fixed income side are having a day off. And I think so are kids in Bombay. Schools are shut. Reema, Nigel?
Yes, Shivaji Jayanti, kids are on leave and we've got a long day here ahead of us and a market to trade. And before that, let's invite the first corporate on the show, and that is Blue Star. B. Thiagarajan, Managing Director at Blue Star, is now joining in on the show. Thank you very much for joining in. At one of the recent conferences, you flagged off that January has reported a sharp acceleration in order inflows, signaling early demand recovery ahead of the peak season. This was in one of the conferences that took place a couple of days back. Can you give us an indication of how January has been? Some numbers in terms of volumes, in terms of order inflows, and what is the expectation for Q4?
Morning, Rima. It is the onset of summer season, which we are all looking forward to. As you're aware, 1st January 2026, the new energy label got implemented. Therefore, in December, there was a huge amount of primary sale, and we expected January to be somewhat muted, but compared with what was last year, it wasn't bad. And after 9 months of pain, we are seeing some movement and the inventory levels are coming down. And we are closely watching the night temperatures. That's what triggers the secondary demand. And it is around a couple of degrees more than what it was last year. So we are hoping and praying that the summer season sets in so that we can look forward to a great FY27 or summer 2026. Things are not that bad. At the same time, I wouldn't say that it has taken off. It is too early to commit that.
Mr. Thiagarajan, good morning. In Delhi, it's a few degrees cooler. Because there were rains, it rained and the weather is completely turned. So I'm just here for the last 48 hours and they tell me that it was actually getting hot and now it's become much cooler. And this is true across the northern part, Haryana, Rajasthan, Delhi, etc. Is this a crucial time in terms of sales build-up ahead of the summer season? And any thoughts on what we're seeing here? I mean, we don't know if this is going to last, but this is happening now.
Morning, Prashant. It seemed to be a harsh winter and an extended winter. So if you walk around in Delhi, they will tell you that summer is going to be harsh. From on the holy day, it will become very hot, so on and so forth. The fact of the matter is the climate change is here to stay. I chair the Indian Green Building Council as well. And we are witnessing significant weather change patterns, and it is going to impact the industry. So that's why it is very important for companies like ours to weather-proof ourselves. So it is not only the B2C part of the business, and B2B part of the business is also important. Having said all this, I have not come across in 4 decades of my career 2 summer seasons washout. If it is going to be so, it will be a disaster for the industry, especially when the production capacity in the country, thanks to the PLI scheme, has come up in a big way, but at the same time, it is overbuilt. My estimate is we have got a production capacity of the industry as a whole. My estimate is around 25 million against a market size of 16, 17 million. So it is very important the summer sets in. The long-term projection is 19% CAGR. So I think it will take off, not to worry. All that it requires is 2-3 weeks of hot nights.
Hi, Mr. Tyagarajan. Good morning. Always good to see you in, sir. The latest buzzword has been data centers, and there's so much of focus on that space. So I want to know, for a company like yours, what kind of a role do you have to play? Let's get a couple of details out of the way first. With regard to data center linked projects, what is your current order book, if you have a rough estimate on that? And according to you, for the industry, what is the opportunity size? Because cooling is going to be very, very important. Please go ahead.
Good morning, Nigel. This is a hot subject. This sector is going to grow manifold in the coming years. So the market size, first of all, I will talk about the MEP services, the electromechanical projects. In a turnkey way, we do the air conditioning or firefighting, electrical plumbing. That part of the business, the first answer is our order book at any point of a time has been at around rupees 1,500 crores. And I estimate the market size to be anywhere between 3,000 to 4,000 crores. This can even double in the coming years. But we have to wait and watch what are all going to happen. Now, we carry out the EPC contracting work in data centers. And thanks to the growth there, we are doing well there. The other part of the electromechanical projects is the manufacturing sector, specifically semiconductor, batteries, electric vehicles. That part of it is also growing. So compared with, I had shared this, infrastructure projects or the commercial buildings, this is a great opportunity for us, and we have been market leaders there. Now, within the data center cooling, many technologies are emerging, like liquid cooling. Someone is talking about taking this to the cloud. Someone is talking about creating data center under the ocean. And climate conditions like Finland is attracting a lot of data centers. But many changes will happen. But the outlook is great. The market is likely to even double. So the market size is 3,000 to 4,000 crores. We have around 1,500 crores of order book at this point of time. Quite a bit of inquiries are there for us to participate and book business.
Okay, got that. But is it possible for you to put a number to the data center contribution? You've shied away from doing that up until now. Can you tell us why? And when will you start looking at quantifying it?
If you look at the Blue Star's revenue, you take it as in the coming years, it will be somewhere around rupees 15,000 crores. It can be the data center alone can contribute rupees 1,500 crores of revenue. That's the number.
All right. And how do we compete with, global players, Vertiv, Schneider as well? How does the industry, leaders like you compete with them?
There are two parts to this, Nigel. One is the putting the equipment together and commissioning that, which is EPC part of it, which is what I am talking about. Inside that, there is equipment like chillers or liquid cooling, and you are indeed right. The players you mentioned are leaders out there, and we are in the process of expanding our product range there. At present, that part of the business, our market share will be less than 10%.
Got that. And one final, okay, I think we're out of time, but if you could tell us, you were looking at a 10% price hike. Has that played out?
Yes. So it is going to be a big thing. Like it can be, it is as high as 10% in some cases. Some cases it is around 5%.
Okay.
And I hope we can maintain this throughout the summer season. But the fear is that it can even increase further if the commodity prices are not cooling off.
Okay, got that. Thank you very much, Mr. Tyagarajan, for joining in. Always a pleasure chatting with you. It's time for 9:10 call. Sudarshan is back with us. Sudarshan.
PNB, buy PNB with a stop under 125.
PNB. Mitesh, yours?
I'll go with the buy on Keynes.
Keynes Technology. Moving on now, NSE has announced additional margins if the top clients form more than 20% of the market-wide position limit. To understand what the implications of this is, Sudarshan is now joining in.
So it's an important circular from NSE, and it has announced that it will levy additional 15% margin on those F&O contracts where top 10 clients form more than 20% of MWPL, that is market-wide positioning limit, and this would be effective from March series. And for March series, they have given the list of 18 stocks, and besides this, additional 15% margin will also be applied to those stocks which are part of ASM, that is additional surveillance measure. Now, stocks will be identified under the framework based on 3-month rolling data, and NSE will continue to review on a monthly basis. So for the month of March series, on your screen, you'll see the list of 18 stocks, and some of them are AB Capital, Aurobindo Pharma, Bandhan Bank, Concord, Crompton, and some others. Now, what will it impact? So just I've taken one example of AB Capital. Currently, exposure margin of total margin is of rupees 2.01 lakh. Now, if this 15% margin is applied, exposure margin will increase by 30,000. So now total margin will increase to 2.30 lakh from 2 lakh that currently we have. Now, which all stocks have the top 10 client exposure with high MWPL? SAIL, Saman Capital, 67%, Concord, 52%, LIC Housing, Patanjali, Aurobindo, NMDC, RBL Bank, AB Capital, and Vodafone Ideas. These are the stocks which have the high MWPL.
So thank you very much for that. And we'll track each of these as markets open, but useful information. Here's a quick recap of some of the stocks that we put out from the morning at 8 o'clock, and they'll come up on your screen. So HUL is up there. Alembic Pharma is down about a quarter. Dr. Reddy's is up about 0.75%. Dr. Reddy's Laboratories is another one. BL Kashyap is up about 6%. There is Jindal SAW, NCC Limited, DCX Systems, Yatra Online, Tips Films, and so on and so forth. Well, some oil-sensitive plays as well, right? I mean, we should look at HP, BP, IOC, ONGC, Oil India, the producers, the marketeers, the refiners, etc. And of course, I mean, the entire IT services space. Last night, we've seen a bit of a relief. We'll see if that shows up here or not. What do we have? I think 25,880. The Nifty Bank, 61,600. Actually, 61,570, 580 now is where we are at. You got advanced decline, which is slightly positive, but I mean, stocks are just about opening up, so maybe another 5-7 minutes we can review it. Nifty Bank is blinking, between red and green. Mid-cap index is absolutely flat, so nothing very much. Maybe just a quick look at the Nifty IT index and how it's opening up before we look at the heat map and how the 50 stocks are starting out this morning. The IT stocks are all there at the bottom of the screen. IT index is up about 1.5%. So this is, of course, in line with what we've seen last night. Heat map and how the 50 stocks are opening up. And I think it should be perhaps more up than down. 30-odd points on the Nifty to show for it. It's nothing large, but at least it's a positive start. Okay, split right down the middle. ONGs, the oil producer, and the tech names are the winning side. And you've got Indigo, oil consumers, Asian Paints, and HDFC Life, which are lower, but nothing dramatic in terms of the moves that we have on our hands for now. Rima, take it away.
Well, it is a quiet start, flat now for the index. As you pointed out, the big stories playing out are one related to the rise in crude prices. So on the way up, you've got ONGC, Oil India. On the way down, you've got oil consumers like Interglobe Aviation, Asian Paints struggling in trade. So that's one big trend. And the second one is the IT rebound. Following the recovery in NASDAQ and the 15% fall in the month of February for the Nifty IT index, today there is some green rebound taking place. HCL Tech is now topping the charts, 1.7%. Infosys TCS advancing 1.25%. Green on the screen for Tech Mahindra and Wipro. Large cap IT names up 1 to 1.5%. Metals also in the green now, and in fact the Nifty Metal Index is inching towards a 1% rally. Hindalco, Tata Steel seeing interest, Bajaj Auto up and about. Eternal is up 0.5% in the Morgan Stanley and Jefferies conviction list on the way up. Eternal finds mention. Eternal is a stock which is down 25% from its recent 52-week high. 368 was the 52-week high on Eternal. The stock is at 278, and both Morgan Stanley and Jefferies are recommending it, saying earnings improvement is on the cards there. On the way down, as we said, oil consumers like Interglobe Aviation, that's the top loser. A couple of FMCG names are on the back foot. Nestle, Tata Consumer, Adani Group stocks seeing selling, but not by a whole lot, 0.5% down. for Adani Ports and Adani Enterprises. And banks are mixed. You've got a Kotak Mahindra Bank, which is down 1/3 of a percentage point. You've got an ICICI Bank, which is flat, and HDFC Bank is mildly in the green. So banks, which batted for the bulls yesterday with an outperformance, have opened up fairly quiet.
Well, that's right, Reba. Well, a few stocks actually are deserving special mention. You have DCX Systems. Well, that one's won a 45 crore order. So that one, I think the last few days has seen a bit of a bounce, but I think it's cooled off a little bit. It's up only around 1.5%. BL Kashyap, they bagged a 300 crore order to build a housing project in Noida. Street likes that, up close to around 8% as we speak. TIL, the board will be meeting on February 23rd to consider a fundraise. So that stock as well is up and about, up close to around 10% as we speak. Big move is what we're seeing out there. On the flip side, NCC is in focus. Now, the NHAI has barred the company from participating in any tenders bids for 2 years. However, the street believes that it's more sentimental negative in nature, and that's why the stock actually from the day's low in just 3 minutes, it's up close to around 5%. Let's see whether or not it can sustain these gains. So that's going to be another important point that we're looking at. Power Grid, Power Mech actually, that one won a rather large order. Though yesterday the stock actually ended sharply higher. So I don't know whether we are seeing a positive reaction. No, the stock in fact is down. They won a 1,000 crore order from the Adani Group. So that one in fact is not reacting favorably to it. Net. Nifty is up close to around 50 points. Nifty Bank, the star performer, is actually underperforming today. If it can get its act together, well, that one could drive the way from here on. And Nifty IT Index, yesterday it recovered close to around 1.5% from the day's low, though it ended down by close to around 1%. Today it's made up all of those losses, and in fact, it's at the high point of the day. So tech and metals, both of them doing well, and the crude oil producers like ONGC and Oil India, they're bucking the trend in trade today.
Absolutely, and I think more coming up in terms of individual names, etc. But that's the lay of the land, at least the word go as we start. So 25,856 is where we're at, 36 odd points in the green. Well, Rana Gupta is with us of Manulife. Rana, good morning. Good to have you with us here. Thanks very much. I remember the last time we spoke, it was around the time there was this huge news flow around Indigo. I mean, if you recall, well, yes. The story has changed, and over the last 10 days, 12 days, it's been about IT services, right? It's always something, and the next thing is always bigger than the earlier thing. Sharp corrections, Rana. Have you put your mind to this one? Have stocks fallen enough, accounting for the uncertainty in terms of how this is going to play out, or you think it's kind of hard to take a strong call here? What's your sense?
Sure. Now, that's a very relevant question and a very important one. And before giving my view on the IT sector, I want to take a step back and look at the situation systematically and holistically. Since the advent of LLMs, there has been a lot of talk in the market that AI is a bubble or not a bubble, or will change everything. I think before even going into that, let's look at what is their investment case. Their investment case, the reason why the US companies are putting it $750 billion or even $1 trillion in capex, because they want to gain from the consumer internet businesses, they want to gain from SaaS companies, they want to get from IT services companies. Now, we have seen some success, and therefore the LLM companies or the AI companies are investing even more. So going forward, there's going to be a huge battle in those areas. Now, IT services is one segment where the lower end, application development, maintenance, coding will be disrupted by LLMs. So coming now to IT services specifically, we think that the companies with a large workforce, with exposure to ADM, BPO testing, they will be vulnerable, and it will be difficult for them to manage their leaky base. However, companies, smaller, agile companies with some IP platform and having exposure to AI should do rather well and help the enterprises adapt to AI. So we cannot take a sector-wide call. It will be very stock-specific and the company's capability specific.
So selective buying in IT, some of the mid-caps, small caps with platform plays. So say something like a Persistent, Rana, is that a stock that you'll own in your portfolio with the disclosure?
So unfortunately, I won't be able to talk about stocks, but I can say that the companies which own IP platform, instead of accelerators, they will do rather well in this environment. But those stocks are few and far between in Indian capital markets.
So what do you like right now, Rana? What is, it's been a tough 2026 to begin the year with, despite so many news flow, earnings growth picking up. Q3 was not bad. The India-US trade deal has signed. The FIs have been wishy-washy. They've been buying sometimes, but selling on another day. What is the call now for this year?
Actually, there is quite a bit to like, and at the same time, some of the large sectors like IT or the FMCG, there is not a lot happening. So that is where the market is caught in a range. But if you look at it beyond that, the market is caught in a range. There has been significant rotation and significant opportunities to make money. So let me refer to the first example that I said, that this AI companies or hyperscalers are increasing their capex. Now, when they increase their capex, what do they need globally? This is a global trend, but there are players in India. They need power, they need chips, they need memory, and they need metals. Now, India does not produce chips or memory, but in power systems, and in metals, there are significant players. So that is one part we like. Coming to India specific, we have been of the view that the credit growth has picked up, and that is now showing in the earning numbers. In fact, we are quite happy with the earnings season that concluded, because when I look at BSE 500 earnings went up by 11-12%, which is now ticking up. Nominal growth is ticking up. So therefore, we like the credit growth stories. We also like selective consumer stories, certainly in the retail area we like. And also we are beginning to like, and that is a stance that we are looking to kind of incrementally change for the better, is on the capex story. This is for the first time after 1.5 years, the companies in the earning calls have made some constructive noises about the capex, particularly around data center, real estate, and some metal investments. So that is one area which is incrementally looking interesting to us.
Okay. Hi, Rana. Good morning. Good to see you again. Rana, I think a few months ago, you had made this point. You're getting a sense that the CV cycle is actually bottoming out. And I've been tracking some of these auto ancillary companies which have a lot of exposure to CV. And that seems to be the case. Even commentary that are coming in from other names, the larger names as well as the smaller names, they're indicating maybe the CV cycle is in a good space. Maybe some part of that is played out in the past quarter and maybe in this quarter as well. How are you all feeling about that theme right now? It's worked quite well. And how do you approach it? Go with the OEMs, go to the auto ancillary companies, or go with the financiers?
So one can play all of this, but let me first share my view on the capex cycle and the CV cycle.
Okay.
Like I was just discussing that after 1.5 years of pause, looks like some incremental growth in capex. Definitely data center real estate is picking up. It is good to see after 2 years of pause, the government capex spending is going at 12% in the defense area. So there's a lot to like. Now, when you think about this data center or real estate kind of capex, a lot of steel and material and the cement is to move around. And that is where the case for the commercial vehicle comes in. Definitely after 2 years of lull, we see commercial vehicle, there is a good runway ahead. And we have seen that pick up in numbers also. Our sense to play that is that the OEMs are still good play. Some of the auto ancillaries are perhaps a little smaller for our liking, but I'm sure there are good plays. And also there are certainly good plays in financiers. We do like companies which are which are financing commercial vehicles as well as some of the smaller and medium enterprises. I think there the credit growth will also be substantial. Plus they can benefit from the CV financing also.
Got that. Just want to take a quick look at where else there is action and activity. NetWeb is up another 6% as we speak. It's the number 2 volume-led gainer. So it's done about what? I think ended about 12-13% higher. And it's up another 5-6% today. The highs on NetWeb were about 4,400, so still about 1,000 rupees away from the top in that sense. You got all of these silver ETFs which are up. Silver B is about 4% higher. MCX is, I think, up 3-odd%. And there is Hindustan Copper, which is also up about 2.5-odd% at this point in time. So, it's kind of sort of broadening out as we see. But I'm just sort of, I'm looking at all NSE stocks sorted by volumes and gains. IT is not there. I mean, IT stocks themselves are up, but they're not on the top of the volume list in that sense. But we'll take it in terms of what we're seeing after all the pain that we've had recently coming through. I think Paytm is down about 1.7%, 1180 or so. It's had a decent run last 2 or 3 sessions now. On the other side, BHEL is down about 1.25%, and NCC is down about 2% or so. Hitachi is another one, which is down 1.3, 1.4 odd percent. So 13 points, by the way. I mean, gains are whittled down, but this is still, I mean, of course, very, very early in that sense of what we are seeing. You know, specific names, have you looked at names like NetWeb, etc.? I mean, you don't talk about that name, but again, to pull you back into this entire AI infrastructure. I mean, that, this AI summit, for example, which is happening, right? It's essentially focused around how do you get all the layers of AI, which is which is chips and model and infra and all of the other stuff, power, etc., all together to have an ecosystem here. And I think, as my colleagues were saying, very few pure play ideas in that sense. NetWeb is one of them. Any thoughts?
Yes, the ideas are few, and we see more opportunities in ideas in the power side, particularly in the switchgear side. We also see opportunities in the generator side, the backup generator side. That is also one area that we like. We also think this will accelerate the growth of the cables. So that's what we like. And also cooling is required. So the HVAC flares is also another set of opportunity that we like on the back of the data center investments.
Okay. That's the IT index. It's kind of sort of, plateaued out a little bit after starting in the green in a very positive kind of way. The other area, Rana, of course, is the entire financial space, which is a consensus kind of call, right? That actually, if there are 3 consensus ideas in the market right now, one is PSUs, the other is metals. And by the way, these 2 have done very well last year. And the third is financials. And financials, I guess, is always consensus because valuations are attractive and so on and so forth. But PSUs have done much better than some of the larger private sector banks. Do you think, one should start to look at the HDFC banks and the ICICIs of the world as well now?
See, there is no doubt the PSU banks have done very well, and they're supported by the ROI expansion. Frankly, I mean, we wish we had a bit more PSU banking exposure. But having said that, looking forward, we do think that the private banks, as a basket, they will do probably perform in line with the markets. But within private bank, if you drill down, you will find the reason that they did not do well last year. Namely because of, let's say, slower credit growth, slower deposit growth, and higher credit cost. There are 1 or 2 banks who are particularly impacted. But we are quite confident those impacts are transitory. And this year, we will see on a year-on-year basis, significant decline in their credit costs. So I think if you look at bottom up, there are opportunities in the private bank which will do well. Staying with the financials, we also like the larger non-banking space, because within the credit growth area, we are most bullish on the SME credit. So the smaller private sector banks and the non-banks which focus on this area, that is one sector that we continue to like.
Rana, it's a pleasure. Thank you very much for joining us and running us through what you make of a range of subjects. It's always interesting to hear from you. Okay, well, let's just sort of, go back to those 2 calls, right? Morgan Stanley put out a note this morning. There was Jefferies, which put out a call as well. And let's revisit those calls with essentially actionables from both Morgan and Jefferies. Rima has walked across to the wall. Rima, take it away.
Hi, so earnings season done. It's been a good one, and some stock calls are coming in from the brokerages. So let's begin with Morgan Stanley's bottom-up ideas list. It's a mix of stocks that they like, stocks where some caution is warranted. So now beginning with the overweight ideas list. There are some stocks which have actually seen pretty good upward momentum. So you've got Tata Steel in there. That's a stock which is up 50% in the last 1 year. Shriram Finance is another stock. This is a stock which has gained 90% in the last 1 year. Some other stocks which are on the positive list, they include a Polycab, you've got a Grasim, you've got a Lenskart, and Lenskart too is holding up above its issue price, which was about 402. And another one in that list is, also Eternal. We should get that next plate up. Eternal is also a stock which is now currently trading at about 277 versus its recent high of 368. So that stock has seen a bit of an underperformance. This is the underweight list now, and that includes stocks like you've got a Berger Paints in there, you've got a Shree Cement. These are two sectors where we've seen an increase in competitive pressure. Shree Cement has underperformed peers. It's missed out on the M&A front. Morgan Stanley is also a bit cautious on SBI Cards, SAIL, SRF. And even Dixon is a stock that they have an underweight rating. You know there are concerns about the smartphone volumes, memory prices, etc. Moving on now to Jefferies. Now, they've released their own top ideas list, and they're focusing on companies where earnings growth expectations are there. So earnings improvement in FY27 versus FY26. So financials are dominating. There are three financials in that list: AU Small Finance Bank, Axis Bank, and Bajaj Finance. They're also constructive on Ambuja Cements, Cholamandalam Investment. Eternal is also on their list. It was on Morgan Stanley list. It's also on their conviction list. In the real estate space, Godrej Properties stands out for them. We've seen real estate index pretty much trade close to its 52-week lows. And now this is a stock, Godrej Properties, which is down close to about 25% below its 52-week highs. Amongst metals, the stocks that they like, metal and energy names, it's Hindustan Zinc, JSW Energy. Auto ancillaries is also another big theme. We saw Bharat Forge earlier, Samvardhan Motherson, Sona BLW are also stocks where we could see an improvement in demand trends and earnings improvement. And the list also includes two pharma names. There was Mankind Pharma earlier, and you also have Star Health, pharma insurance, etc., clubbing that list together. And Voltas also finds a place with expectations, hopefully, of a strong summer driving growth for them.
Okay, all right. Thanks a lot for that, Reba. Well, let's focus on another space. That's the cables and wire space. We have with us Mr. Anil Gupta, the CMD of KEI Industries. Well, good morning, sir. Always good to have you on the show. Well, we want to focus on India's big data center power market. That's expected to grow big time in the next few years or so. So for you, I wanted to understand what is the opportunity, for the cables and wires industry itself.
Yeah, good morning, Nigel. The expected investment in data centers in the country is around $30 to $35 billion in next 5 years by 2030 or 31, and which consists of around 8 to 10 gigawatt of data centers. They will be mostly located in the coastal towns in Andhra Pradesh or Mumbai or in Chennai areas. And they will be providing a lot of cloud-based solutions and connectivity with the overseas markets for the data transmission, and as well as the artificial intelligence. Now, our expectation is that per gigawatt of data center requires around 3,500 to 4,000 crore worth of cables. And power cables are the backbone. LT cables are used in the interconnections. High voltage cables are used for bringing heavy power to these data centers. And they want at least 3 layers of connectivity, so that even if one fails, then another 2 are operational. And then we feel that in the future, the grid connectivity may be through either high voltage AC cables or maybe even high voltage DC cables.
Got it.
So this is and then most of the cables used in these data centers are copper power cables because of the space constraint in these sectors. We believe that overall 4 to 5% of the total data center investment is an opportunity for wires and cables. And if I say that out of that total electrical in a data center, I think 30 to 35% may be the value for cables out of total electrical substance in the data centers.
All right. Mr. Gupta, let's break it down a little bit more. If I got that number correct, you said 1 gigawatt of this data center requires around 3,500 crores of cables and wires. That's correct, right? So that works out to around 3.5 crores per megawatt. That that matrix is in line?
Yes.
Okay, got that. Now, given that India is going towards 8 gigawatt by 2030, mathematically, this can throw up an opportunity of more than 25,000 crores for the industry on the whole. And the industry, I believe, today is valued at roughly around 80,000 crores. Would that be a fair estimate? Incremental opportunity for the cables and wire space could be 25,000 crores?
It is correct. And I think that at the moment, industry is, total industry size is more than 1 lakh crore. And 25,000 crore is a very, a good estimate. And maybe we may go up further also. Because apart from these data centers, when they come, they need energy. And the cables will be required in those energy projects also, whether it is solar power generation or wind or thermal power generations, and then related connectivity to these data centers or power transmission system.
Got it. All right, sir. So, if I look at it, I think currently in the cables and wire space, you have what, around 11 to 13% of the market share as of now?
Yes.
So this data center opportunity for KEI Industries itself could be roughly around 2,500 to around 3,000 crores?
Yes, and but as we are growing by a good CAGR percentage year after year, so I think it will have a compounding effect on our growth.
Okay, how do you compete, sir, with regard to imports? Because that could be the other fear. Or do you believe that the market is large enough that our domestic players are as competent as ever and imports are not a fear?
Imports are absolutely not a fear. It is purely a domestic supplies, and we are well equipped to supply any quantity and any amount of cables to these data centers and related power infrastructure. As of now, also there are no imports in cables category.
Right. Sir, good morning. Prashant here. You said data center for 1 gigawatt capacity data center, the requirement is about 3,500 crores.
Yes.
Cable. Okay.
Yes.
So okay. So because yesterday, for example, there was Mr. Krithivasan of TCS saying that typically in an AI data center for inference, etc., the total capex required is some. I think he said $40 billion, 1 gigawatt total. So, but for cabling, it's less than $500 million is the requirement, right?
Yeah, because as I said that the total investment in data centers, the cable and wire percentage should be around anywhere between 3 to 5% of the total investment in a data center. So I think that if a $40 billion investment comes in a 1 gigawatt project, then I think we can expect $1.2 billion of opportunity in the cables.
Right. That is much larger than the 3,500 number that you said. That's why I was just trying to check.
Actually,
right?
These figures, are only estimated. But we know that the energy requirements are so large. But I believe that for 1 gigawatt of data center, $40 billion looks too high. So it can be maybe $7 to $8 billion. What we have read which is Google is coming, or Microsoft, or even TCS is coming up with 1 gigawatt data centers.
Okay. All right, Mr. Gupta, as of now, any projects have been executed on data centers for a company like yours?
Yes, we have been executing data center projects for last more than 5 years now.
Okay.
But at the moment, the data center size is very small in India, anywhere between somewhere 10 megawatt to 40 or 50 megawatt.
So it's relatively small as of now, though you have been executing. Got that. And as you told us, imports are not a worry. But can the export data center market be a big opportunity for you? Do you have a rough estimate of that? What could the opportunity size be?
Export data centers coming up in the developed countries is a very big opportunity. But I don't have any relevant data but even at the moment, whatever we are exporting, a lot is going into data centers as well in overseas markets.
Mr. Gupta, post the budget announcement of the 21-year tax holiday for foreign data centers setting up shop in India, have you all had any inquiries?
It is too early,
Too early.
because they will take shape maybe another 6 months to 1 year in terms of investment plans and initial groundwork. So the cables will come later.
Okay, all right. Final question, Mr. Gupta, before we let you go. Could you tell us how's the competitive intensity for the industry on the whole, and just revise the guidance that you'd given us with regard to growth for this year? And on that sort of a base, what kind of growth can you look at next year? And given that input costs have spiked up, what's the margin guidance?
The input costs, I have said a number of times that doesn't affect us because we are managing our inventories versus the order books very closely. And as per, we expect to grow around 20% overall for the full year, and similar numbers in the next 4 to 5 years continuously on a CAGR basis. So we see that we are in a very good position in terms of growth and grabbing the opportunities.
Okay, all right, Mr. Gupta, it's been a very, very interesting conversation. Thanks for putting some numbers to it. So the opportunity for the cables and wires industry could be 25 to around 30,000 crores. The matrix that we're working with is 1 megawatt, requires 3.5 crores of cables and wires. So for an industry that's looking to go to around 8 gigawatt, well, the opportunity could be 25 to 30,000 crores. But Prashant wants to come in. Yeah.
Nigel, that number, I checked, Mr. Gupta, that 1 gigawatt, I think that 40 billion which TCS mentioned, that I think includes GPU cost as well. So, that's what I said. The AI data center, so that's a total cost. I mean, the building and the cabling and the cooling and everything included, but GPUs also, because GPUs is apparently some $25-30 billion, and the rest is $10 billion. As you said, I think you were referring to that $10 billion number, right? But that is excluding the GPUs. So, yeah, I mean, no, I just wanted to sort of clarify that. Thank you very much, Mr. Gupta, for joining us, and really appreciate those insights. All right, well, we'll take a quick commercial break here. We'll come back in just a bit from now. More conversation on markets, and of course, our next management will be with us as well. 25,777, 40 points lower on the index. Stay tuned.
Welcome back. IT is the big talking point for the last couple of days. We've seen a big sell-off in IT names. And once again, we should pull up that Nifty IT index to see if there is any recovery or that has plateaued out. The Nifty IT index is still holding up close to about 3/4 of a percentage point. There have been a lot of questions about what kind of growth rates Indian IT companies will see on the back of the AI disruption. Terminal value is the word that you will hear often, which basically means that what will growth be? Will growth be, say, 4%, 5%, 7%, 8%? Or given the AI opportunity, can that even accelerate? Or given the disruption, can perhaps growth rate even come to zero? That's been the big debate in the markets versus the valuations. But let's get you some opinion. Tata Group is not pressing the panic button over the AI disruption. Chairman N. Chandra said TCS will ride the AI wave and IT companies will have greater responsibilities in the AI era. Meanwhile, we also chatted with TCS MD and CEO K. Krithivasan, who believes that every disruption, every tech cycle that has come through ultimately has expanded the scope of work. Listen in.
The way to look at it is, it will create enormous opportunities. AI is a very, very important multi-decadal change. Every company has to figure out, has to ask fundamental questions. What is my moat?
If I could rephrase what you said, it's not going to be so easy to throw out Indian IT services companies in the mix as is being made out to be. Essentially, that's the point that you're making.
Point. The second point, actually, the more important point I'm making is IT services companies, rather system integrators, will have a greater job, greater responsibility. One other point, but the companies have, IT companies have to do a lot of work.
Yeah,
like every other time, they've got to equip themselves with all the skills that are required. They've got to go through that.
Execution. The execution risk. Absolutely, the execution risk is going to be the key one.
There's so much happening, and there's no need to panic. You have to think, sit back, relax, and think properly. There's so much of more work to be done. Every time there's a disruption, the work expands. And the good companies will participate, take a forward-leaning approach, invest in that, and they should be able to increase the pie. It's again based on a larger scheme. We believe that you will be able to participate more in the AI ecosystem if you operate across multiple layers. We are looking at participating right from the infrastructure layer. There's the infrastructure layer, there's a model layer, there's the application layer, then there's the intelligence layer. We want to increase our participation in each one of those layers. That's why you see we participating with TPG, then signing up with AMD. We also signed up with some of the design companies. So that's the overall plan.
Well, we have someone who's been a transformer himself now. He's, of course, I'm talking about Mr. C.P. Gurnani. He's now the co-founder and vice chairman, AI on OS. That's the name of the company that he's founded. He's, of course, best known in his previous avatar for sort of integrating Satyam Computers' acquisitions with Tech Mahindra, and of course, it's done very well. Mr. Gurnani, thank you very much for joining us. Appreciate your time. Prashant this side. I mean, I think we need a bit of a turnaround, transformation, integration with all this AI talk around as well. And we played out some of those sound bites. We've heard from Chandra, we've heard from Kriti, we heard from Nandan earlier, Salil Parekh. I mean, just first your own thoughts, sir, on how investors should view this, because this is kind of new for everyone. And when we talk about financial markets, most money managers are generalists. They're not tech specialists. So, they panic first and then ask questions later. So just your thoughts as an expert, sir, in this field.
Prashant, I can only give reactions for the investor. Number one, just reminding them that technology adoption cycle in enterprise is much longer. If they go back and look
Mr. Gurnani, Mr. Gurnani,
which was the language,
Yeah, Mr. Gurnani, I apologize. There's this AI summit, of course, which is underway, and we have the founder of Anthropic speaking right now. So if you'll allow me, if you stay with us, sir, just want to cut to it, and then we'll come back to you and we'll continue our conversation, sir. Let's do that.
Autonomous behavior of AI models, their potential for misuse by individuals and governments, and their potential for economic displacement. India has an absolutely central role to play in these questions and challenges, both on the side of the opportunities and on the side of the risks. As a sign of our commitment, we just this week opened an office in Bengaluru and hired Irina Ghose, who has spent 3 decades building businesses in India as our managing director for Anthropic India. We've also announced partnerships with major Indian enterprises this week, including Infosys and others. On the opportunities, one dynamic that we have observed is that technology and practices pioneered in India have historically set a standard for the global South and have helped to diffuse technology and humanitarian benefits through the global South. We're therefore we have been partnering with for several months, nonprofits such as the XStep Foundation, Pratham, and Central Square Foundation to use our models to advance digital infrastructure, education, agricultural efficiency, and health in the hopes of spreading AI's benefits across the global South, starting with India and diffusing out to the rest of the global South. We're also partnering with Karya and the Collective Intelligence Project to build evaluations and metrics of our model Claude's performance on India's many regional languages. On practical and locally relevant tasks, we'll benchmark like agriculture, legal tasks, and educational content. On the risks, India is the world's largest democracy and can be a partner and leader in addressing the global security and economic risks of the technology. We'd like to work with India on testing and evaluation of models for safety and security risks in the tradition that was started by many global and national AI security institutes that have been stood up around the world. Even more, we see a particularly strong opportunity to work with India on studying the economic questions as part of the New Delhi Frontier AI Impact Commitments, which we're excited to join. As part of our Anthropic Economic Futures Program and Anthropic Economic Index, we publish statistical insights into how AI impacts jobs in the economy. We're excited to increasingly share this information, exchange information with the Indian government to share insights and inform evidence-based policymaking, convene meetings with economists, labor leaders, and policymakers to adjust, to adapt to the economic impacts of AI. We believe that AI will greatly grow the economic pie, including in India and the global south, but that because it is happening so fast, it may lead to a time of disruption. And we need to work together between companies and the government to better manage that time of disruption and bring better prosperity smoothly to all. I and Anthropic are very grateful to be part of all these efforts, and I'm honored to be here and working on these questions with all of you.
Thank you, Mr. Dario Amodei, for that illuminating address. Ladies and gentlemen, it is our privilege now to welcome Shri Sundar Pichai, CEO, Alphabet and Google, for the keynote address. We look forward to his insights on the evolving role of artificial intelligence. Mr. Sundar Pichai.
Namaste. Thank you, Prime Minister Modi and distinguished leaders. It's wonderful to be back in India. Every time I visit, I'm struck by the pace of change, and today is no different. Back when I was a student, I often took the Coromandel Express train from Chennai up to IIT Kharagpur. To get there, we passed through Visakhapatnam, Vizag. I remember it being a quiet and modest coastal city, brimming with potential. Now in that same city, Google is establishing a full-stack AI hub, part of our $15 billion infrastructure investment in India. When finished, this hub will house gigawatt-scale compute and a new international subsea cable gateway, bringing jobs and cutting-edge AI to people and businesses across India. Sitting on that train, I never imagined Vizag becoming a global AI hub. Just as I couldn't have imagined that one day I'd be spending time with teams figuring out how to put data centers into space. Or taking my parents for a fully autonomous car ride in San Francisco. Seeing a Waymo right through my 83-year-old dad's eyes, I saw the progress in a whole new light. Of course, he said he'd be more impressed if it worked on India's busy roads. Still working on that one, Dad. The progress shows what's possible when humanity dreams big. And no technology has me dreaming bigger than AI. It is the biggest platform shift of our lifetimes. We are on the cusp of hyper-progress and new discoveries that can help emerging economies leapfrog legacy gaps. But that outcome is neither guaranteed nor automatic. To build AI that is truly helpful for everyone, we must pursue it boldly, approach it responsibly, and work through this defining moment together. Why bold? Because AI can improve billions of lives and solve some of the hardest problems in science. For 50 years, predicting protein structures was a grand challenge and a blind spot that stalled drug discovery. Demis Hassabis and his team at Google DeepMind asked an audacious question: how could we use AI to solve this? That question led to AlphaFold. This breakthrough didn't just win a Nobel Prize, it compressed decades of research into a database that is now open to the world. Today, over 3 million researchers in more than 190 countries are using it to develop malaria vaccines, fight antibiotic resistance, and much more. And we are asking similarly bold questions across the scientific stack, from cataloging DNA disease markers to building AI agents that act as true partners in the scientific method. We must be equally bold in tackling problems in regions that have lacked access to technology. Take El Salvador, where Google has partnered with the government to bring affordable AI-powered diagnosis and treatment to thousands who could never afford to see a doctor. Or in India, where our work together is helping farmers protect their livelihoods in the face of monsoons. Last summer, for the first time, the Indian government sent AI-powered forecasts to millions of farmers, possible in part because of our neural GCM model. I see language inclusion as another exciting ambition. In Ghana, we are collaborating with universities and NGOs to expand research and open source tools across more than 20 African languages. We need this bold thinking in more places to tackle more problems across health, education, economic opportunity, and more. Technology brings incredible benefits, but we must ensure everyone has access to them. We cannot allow the digital divide to become an AI divide. That means investing in compute infrastructure and connectivity. I mentioned our Vizag investment, and we have others in Thailand, Malaysia, and more. We're also building a vast network of subsea fiber optic cables, including 4 new systems between the US and India, as part of our America-India Connect initiative announced yesterday. Responsibility also means navigating profound economic shifts. AI will undeniably reshape the workforce, automating some roles, evolving others, and creating entirely new careers. 20 years ago, the concept of a professional YouTube creator didn't exist. Today, there are millions around the world. Training is crucial. We have trained 100 million people in digital skills, and our new Google AI Professional Certificate will help people master AI in their jobs, available globally. Finally, trust is the bedrock of adoption. We have created tools like SynthID used by journalists and citizen fact-checkers globally to help verify the authenticity of the content you read and see. But no matter how bold we are or how responsible, we won't realize AI's full benefits unless we work together. Governments have a vital role that includes as regulators, setting important rules of the road and addressing key risks. And importantly, also as innovators, bringing AI to public services that improve lives and accelerating adoption of these technologies for people and businesses. There are glimmers of this from around the globe, from the Ugandan government using AI and satellite imagery to locate priority areas for electrification, to getting potholes fixed for residents more efficiently in Memphis, Tennessee, by using AI scans of road surfaces from buses. Tech companies must also step up, building products that boost knowledge, creativity, and productivity to help people achieve their dreams. And we also need companies of all sizes thinking about this, harnessing AI to innovate and transform their businesses and sectors, and to skill up and empower workers. We have the opportunity to improve lives at a once-in-a-generation scale. I know we have the capability to do this, and looking at the leaders here today, I believe we also have the will. Now we must do the work together. Thank you.
Thank you, Mr.
Keep cutting back to the conversation and insights coming through from the India AI Summit. At about 10:30, even Prime Minister Modi will be speaking. Mukesh Ambani will be making his address. Sunil Bharti Mittal, all the industry stalwarts, global tech titans we just heard. But we'll keep getting you more on that. Prashant?
Yeah, Reema, there was, I think, N. Chandra was speaking as well, right?
Yes.
Earlier. And so Tata and OpenAI, and we should put this out, I guess, once again, that OpenAI and Tata have partnered. That's what I think Mr. Chandra, chairman of Tata Sons, announced. They're partnering for the first 100 megawatt capacity. So if you, for our viewers, remember, TCS is setting up a 1 gigawatt AI-ready data center, for which they've tied up, of course, with the TPG. This is, of course, all news which we know. And I guess the first 100 megawatts of this data center, whenever it comes up, is going to be OpenAI. And I think, we don't have more details, and I'm assuming there will be a formal release kind of, et cetera, which will follow. But that's a partnership. The hope always has been, and people, some analysts, et cetera, were complaining it's not a very high ROI business. But the hope has been that, with an AI data center, a company like TCS perhaps is able to work with global hyperscalers, AI firms on a global basis. And I guess this is a step in that direction. So just wanted to sort of mention that that was one specific thing which came out from all those speeches, which of course was outlined by Chandra, chairman of Tata Sons. So that's, the AI summit. As Reema said, there are many more voices through the course of the day, which we're going to address. Shilpa Rao is with us with just a quick word on how we are trading. I think we opened 40 high. We're down 40 now. Shilpa, good morning. So on indices, any trades? And we'll talk about stocks.
Good morning, Prashant, and thank you for having me on the show. Indices, we see there's some sort of selling pressure. Nifty is facing resistance at around 25,900 to 26,000 marks. So the support comes at around 25,600 on the immediate basis. If we hold that, we might see some sort of bounce back. Otherwise, some pressure is likely to stay on the indices for a while. Bank Nifty, likewise, 61,000 to 60,800 should act as a support. And if, there is some sort of momentum happening, then you will see 61,700 to 800. But of course, it's a range bound and consolidating, maybe sentiment today.
Yeah, no, got that. Shilpa, in terms of specific stocks, what would you recommend?
I have a buy in AU Small Finance Bank. It is showing good momentum in spite of the pressure in the market. It is trading around 1,030 zones. So your stop loss should be 1,015 and stay long in the trade for the levels of 1,050 to 1,060. The other one would be a sell in Sonacoms right now. It is not, it is not sustaining above 540. Which is a make or break for the stock. If it is not sustaining above 540, then you will see a slide towards 520. So that is one stock to keep on radar with a conditional sell below 540.
Got that. Thank you very much, Shilpa, for that. Really appreciate it here on CNBC-TV18. So those are some trading ideas coming through as well. I think markets, the advanced decline, if you look at it, NSE advanced decline is flipped. You got about 1,450 stocks which are lower and about 1,300 stocks which are higher at this point in time. We'll take a quick commercial break here. We'll come back in just a bit. And Manisha, of course, with commodities, a sharper focus there. And that's coming up. Stay tuned.
Welcome back. Let's talk commodities. Manisha is now joining in. Manisha, what are you looking at today?
Well, I'm looking at the crude oil prices because the biggest of the gains in the overnight market came in the crude oil prices. If you look at the prices overall, it's up by nearly 4%. We are trading above $70 a barrel. For it's not just crude oil prices, heating oil prices as well gained up by nearly 5%. Much of this is the geopolitical premium with the kind of statements that we are hearing from US and from Iran as well. US-Iran are yet to reach a potential nuclear deal is what the markets understand, as there have been a lot of analysis from the statements both sides. Interestingly, there's fears of military intervention by US in Iran. That's exactly the statement that we have heard coming in from US as well. There also are reports of Iran temporarily shutting parts of Strait of Hormuz. The report suggests that this was done for a few hours, but whether or not or that partial close has been opened or not is something that the street does not know, is the reason you have seen more follow-through buying coming in the Asian markets right now. Iran and Russia also are expected to conduct Navy drills in the Sea of Oman and Northern Indian Ocean. That's happening today on Thursday, and that's yet another thing to watch out for. Then you have Ukraine and Russia talks in Geneva, which also have ended without any breakthrough. There also is an interesting report that is coming from Eurasia Group, which says that there is now a 65% probability of a US military strike on Iran by April end. So these are the kind of reports that are keeping the markets very, very jittery at this point. Apart from geopolitics, it's a lot of other things as well. To begin with, it is the decline in US crude inventories by 500,000 barrels that has been supportive. And then the street is also reacting to buy in technology stocks. You also have seen US industrial production and housing starts data come in much better than what the street was anticipating. So when you look at the overall imports from Russia for India as well, that number also seems to have declined quite considerably, almost half. And that is yet another thing. Markets do believe that India would be shopping at market level for various crude in varieties, and that has been supportive in the global markets there. if you look at the overall prices, the last 3 years have not been positive for crude. There has been this conversation about surplus, OPEC bringing in more supplies as well, Chinese demand on the weaker side. So after 3 years of constant decline in case of crude oil prices, 2026 is trading 14% on the higher side in the markets therein. While this conversation is still about supply surplus, because you have OPEC, which may resume supplies by the time it's April. It also is about IEA reaffirming that 2026 is going to be an year of surplus, unless, of course, there's some geopolitics or we see some action at the Strait of Hormuz. Take a look at how we have seen the crude prices as in sense of range. Last year, all of 2025, you saw crude ranging between 58 to almost 82. So that has been a $24 of a range there. In this year so far, we started the year with almost $60 a barrel. We're trading at 70. So $10 of a range in crude oil prices already has been done there. My final plate should show you on what there are expectations in sense of crude price outlook for 2026. So this is a club that believes that $60 to $68 a barrel of an average price is where you could be looking at in sense of crude prices. Within that band, you have Morgan Stanley, Citi, UBS, Bank of America, etc. And then there is a different club which believes that it is going to be sub 60 as an average that you could be looking at in sense of crude prices. You have CBIC, ABN AMRO, Goldman Sachs, EIA, all of them believing that eventually, as an average, you could be looking at below 60 for 2026.
In fact, the surge in crude prices is putting a lid on the Indian markets. While Nifty IT index has rebounded, markets are now in the red and below 25,800. Get into a break. On the other side, Lata will speak to Ashish Gupta of Axis AMC on banks, bonds, markets, macro. Stay tuned.